When you say you would buy commodities when they correct, where are you leaning? Hard commodities, precious metals, soft commodities?
Agriculture has still been the biggest disaster of the past few decades, so I would continue to buy agriculture. Agriculture has done very well in the last year or two, but when we have a correction, that's where I would focus. But precious metals, if silver and gold go down, which I suspect they will, I would buy more silver. It just depends on how the markets react. Maybe energy, but certainly agriculture, certainly silver.
What I want to understand is, at a personal and a portfolio level, how much cash levels are you currently sitting on? Because this doesn't seem like that 2020 kind of crash that it's going to get away anytime soon. It seems like we're now headed in for slightly time-wise, elongated kind of a corrective phase.
See, the beauty of this market is you don't have to sit in the cash. That's what I was mentioning. Now you got opportunities like, I'm not recommending, I'm just giving you what my portfolio, like things like IndiGrid Trust, things like Power Grid Trust, things like real estate REITs. They are giving you quarterly returns. The share prices are good. People are buying because asset values are going up at the end of the day. So you really don't need to be in cash at this point of time. You got to make every rupee of your kind of work for you. So India offers the opportunity today. We didn't have it earlier. We have got it now. So we have parked most of our cash in these kind of structured instruments at this point of time. Cash would be not in, maybe it's about 10-15% of what we want to invest in the market. But most of it, if we need to invest in equity, we will move it out of these portfolios and bring it into the mainline equities. The second part is that you talk about cash and so on and so forth. Forget cash. Let the interest rate come to 8.5-9% in fixed deposit. You'll find the reverse flow. You'll find people going to FDs, which is not a bad idea. Already FDs and NBFCs are at 11% or 10.5-11%. If banks go to 8.5-9%, I think that's a good place to park. So asking a question is, I think you should have minimum 25-30% or maybe more than that portfolio in cash or REITs or something trust securities, at least 35-40%, because this market will give you a lot of opportunities. April, May, June is a bad quarter. So when the results come out at the end of the day in August and July, you will have a lot of opportunities to buy your favorite stocks.
So Vineet, let's get a little bit more specific than that. What within mid and small caps are you recommending right now?
Okay, so I think in terms of our own exposure, we have, within the small cap space, we have a decent amount of exposure. I mean, I would say large amount of exposure to consumer-oriented businesses. I mean, and these may be very small segment. These may be, kitchenware, footwear type of businesses, the theater businesses. So I would say that you have a lot of opportunities which are available to expose yourself into some of these names, because we believe long term the consumption trends are going to be positive for India, and with that in mind, good brands, high quality businesses, good management which are available within these are something which we are highly exposed to. Next, comes the auto angst as such. I have been sort of talking about the cyclical recovery in auto for a while. It's not happened, it's got delayed, but my sense is that auto has been in a very bad cycle, and once the recovery starts picking up, it could be a very smart recovery over the 1 or 2 years, because of the, let's say, 4 years of decline as far as the auto sector is concerned.